Hey, welcome to Closing Beat, everybody. Happy Monday. An exciting Monday, right? Well, we're going to cover it all here today. I am a financial advisor at Jazz Wealth here, all by myself today. Mama Jazz was in a little bit of a fender bender. She's okay, but got to take time to do her thing there. So Cody's gone to help her and take care of that. So just me here today. So we'll hang out and got a lot to cover, actually. I was pretty excited all weekend. I was kind of looking for this week to be more of a volatile week. And so I wanted to prepare, right? I always get excited about the things I can share with you because we're teaching advisors. So every chance I get to explain something, even last week's Wine and Wealth class was a very specific class on, well, how do we manage our funds, right? What does it look like? How do you go in and see what's going on there and what kind of decisions we're making and stuff? So I like to teach. I just think the more you can teach, the more questions people will ask, and the more questions they ask, the smarter they get, which means the straighter they can keep their dough. Is kind of the fun way we like to say it. Anyways, this week there'll be no Wine and Wealth on Thursday, no Closing Beat Thursday as well, as we are headed to somewhere in North Carolina, the what is it called? Sugar Mountain. Going to try to ski and snowboard and slide on snow and fall down and get all kinds of wet and stuff. So we're getting ready for that. But it's cold here in Florida, right? It's pretty damn cold. I mean, for Florida, I know I get it. A lot of you up there, you got other things going on. But let's get to the markets. Let's talk about what's going on here because active day, very active day, and quite a wide range day. So I've talked about this in the past where we had wide range days that had happened to be to the downside. In particular, one to the upside was gold, and we saw some moves as oil pulled back. But let's take a look. It looks good enough. So here's the S&P here. And we started off today with a pretty massive sell-off, that washout, right? That's the end of your waterfall drop. So you have a stock market and a lot of stocks inside of them that have rolled over and look like a waterfall, right? And anytime that happens, they don't like to stay like that. Any stock, any cryptocurrency, commodity, it doesn't matter. Any index, they don't like to stay extended for very long. And I'm going to show you that in a couple different ways here. Now, we talked about in our Notes from Jazz this weekend, if I could just pop over there. Here's our Notes from Jazz email. We actually talked about, and I shared this on a video, the FinTips video today. Let me go through. This is what it looks like if you're interested. We talked about the difference between, this is going to look a little funky, but, an odd pullback, which if you're looking at the market over the last 5 years, this pullback is odd. But in general, this pullback is really not odd at all, even after this morning's sell-off, just slightly above average. So I really made a point to highlight that kind of going into this week, thinking, here we go, right? We're going to have a lot of questions about this, so let's talk about it. Well, what happened with the S&P today is we did get that full washout and sort of final selling to the lows in the short term here, and all of a sudden people said, hey, wait a minute, that's 11-12% pullback. Let's see about getting a little bit of a buy on that. And it's actually very normal. And so one of the things I did, I used our research site to come up with this. Here's our research site, just so you can see the data that I used. I said, well, hey, I want to see anytime the stock market has, oh, you know what? I didn't plug in I hope this is okay. Yeah, I didn't plug in the Ethernet. This is all streaming wirelessly here. But anyways, we look to see anytime the stock market has a 10% drop in 10 days, this kind of really quick sell-off, what are the forward results? And this looks a little bit sloppy. It's one way that you can see it, and all I really did was put it into a sheet for you. So let me make this a little bit clearer. Here you go. Here is the S&P's performance going forward following a 10% decline in 10 days, right? Which is basically what we had. So we look back 30 years. Over the next 1 week, you got a slight increase there that basically started today, right? People trying to buy that dip. Over the next month and so on, it gets more and more positive, meaning these drops in the markets prove to be buying opportunities if you're a longer-term investor. If you're a trader, you're having your fun in there doing whatever you're doing and getting that volatility. But as you look out a month, you got a 4% average rally from there. Over the next 3 months, 10%, 6 months, 18%, and 38% over the next year. Now, this is not just looking over the last 10 years. Had I taken this data and said, I would like to know only in the time frame between now and 10 years ago, what would that result? These would all be like solid green. You'd see numbers that are really not accurate, I would think, for the long run. So more data that you can use there. Percent positive over the next week is basically a wash. So you have a plus or minus gain over the next week, and basically a 50-50 shot of that happening 48.94% of the time. As you get going further and further, you could see how the stats become really complex to try to fight the market when it has this kind of sell-off. You don't want to be a seller the longer you go past this here, and that's just the data that you can look at to if you want to play around with that. Now, if you're looking inside the market today, there's a lot of things going on where we've had some of these big tech names, and not only big tech, but just stocks in general had big sell-offs, right? The Gap is a retailer that did well today. I don't mean to point that one out, but things like Paycom, these have had rather steep sell-offs. And so just a hint of something to get people excited about buying is what you saw today. T-Mobile's one that finally got a little bit of a bounce in there. Semiconductors. The oversold semiconductors. Here's KLA 10 core. I had mentioned that microchip was one of my more favorite ones, again, because it was just so extended. To have a stock get this far away from its 20-period moving average, it sounds like it for whatever they go for, but you know you got a discount relative to the average, right? And so you might be happy with that. So that works for me. But in the same respect, if you were to show up and say, I'm paying slightly above the average price that people paid over the last 20 days, that might make you not so happy. You might wait and see if there's a discount. It's the same thing in the stock market. It's the exact same thing, only for whatever reason, when the markets fall, people get nervous about cheaper prices, and they worry that, oh my God, I shouldn't have paid that, right? But in reality, if it was any other product on the planet, you would think, here's a deal. I don't know if I got the best deal, but at least I got a better deal than what I got before. And so that's what you see going on there. Now, looking at some of the semiconductors that had big sell-offs, tech stocks that had big sell-offs, hell, even the banks to some degree. You had banks pulling back after their kicking off earnings season for us. Big sell-offs there. Not so extended, but big sell-offs. So something to take a look at. You want to get excited about these drops when you can, especially if you're looking to add to your cost basis or hopefully reduce your cost basis to some degree for a long-term investment, right? So I'm never going to be one of those guys that says, the market's selling off, pat you on the back and say, don't worry, you got 20 years till you need the money. Don't worry. No, it's an opportunity. So we look at it as, you got a discount here. You were going to add dollars anyways. Maybe you just add them now, right? And who knows if you get the bottom, but worthwhile. It's better than I could have said a week ago. Anyways, looking at the Nasdaq, you got the exact same thing. I could repeat the same exact thing. We were down about 5%, 4.5%, 5% or something earlier this morning. I was all kinds of excited. And we got the reversal here as well. Doesn't matter what index you're looking at, you're going to see the same thing. Names like Peloton. Well, that's news driven today, but Peloton up, the biggest gainer on the day. Datadog, which has been having a heck of a time lately, back around the 200-day moving average. DocuSign, finally, maybe a little something there. It's a tough one to decide you want to buy, but that's that. Adobe, trying to put in an actual decent-looking bottom there. Some of the other semiconductors, like Applied Materials. You don't expect these to go back to highs, by the way. So don't let me mislead you here. I'm saying that because of how extended we were, you expect people to take a shot at that bottom. We don't know if they'll be right, but you expect people to take a shot. That's just little bits of money going, 10% pullback, I'll put a little money in there. That's not actively committing lots of dollars. So when you look at something like an AMAT or any of the semiconductors, a lot of the tech stocks, you fully expect to see people try to guess that that's the bottom. I highly doubt that it is the bottom that then takes us to all-time highs. You're going to have lots of little spurts and starts and stuff along the way. It would probably be the same for the market. I highly doubt that the Nasdaq shakes off all the news, the higher rates, the Fed meeting coming up, the fact that there's now a 98% chance that they're going to raise rates in March, right? That's the bets that people are making. That it's not just going to forget that and then we go to all-time highs. So don't get that in your head just yet. It is way too early to tell. Also, the Russell was very extended. I had put on the IWM, sold puts on the IWM just one day early. I did it on Thursday, I believe. So finally getting a little recovery on that one there. And look across the board, right? Just look across the board at everything that had to sell out. Netflix, right? Take a shot on the earnings there. They had some news come out today, so it did make new lows, but ultimately really extended. Same thing there. And so I just want to point that out, right? That's one way to take a look at it. Going sector-wise, retail is going to be your best performer here. Not sector-wise, but looking at the different areas of the market, retail is not a sector. Best performer there, you got home builders, XHB, finally giving you a little bit of a rally there. That XHB, got a position on that. I sold the $70 puts, so I was early on that one, so I don't quite have a profit yet on that one. Taking a look at oil. Oil did pull back and continues to try to pull back here for you. I maintain that it's a tough one to try to guess that this is going to sell off from here, especially when you've got oil explorers moving higher today, oil service stocks moving higher today. I think that's a tough one. Semiconductors, we already mentioned, as a whole, got a nice little rally here today, a broad rally. Consumer discretionary stocks also very extended and sold off, right? So think about that. You have all these areas of the market that have been washed out to the downside. If all of them get a little bounce, well, those are the components of the market. Therefore, the index would show itself higher as well. Let's try to get that out there. Transport's a little bit higher as well. And if you look to the downside, utilities, where'd they go? Yeah, still finished the day down. That was your worst performing area, down about 1%. And gold miners, I don't know what it is about gold. You look at gold, it just refused to really get anything going today. Got a lot of emails about that. Should we use gold as a hedge? Can you use gold as a hedge? It's been a very poor hedge up to this point, and we already know inflation is there. Same with Bitcoin. What happened to that, right? It's supposed to be a hedge. It's a horrible hedge. That's now the third time that Bitcoin has proved to you that it is not a hedge if you're thinking about it. It's pure speculation. I could go off on a tangent on that one, but I'm going to hold tight for a second. All right, new highs and lows, right? Some interesting things here. You got Ecolab. I believe it was downgraded today. 230 or something. Yeah, 230. There's a couple downgrades. 220, 230. New price targets for Ecolabs severely extended, right? What, you think it's going to keep dropping at this pace? The company's not going bankrupt, right? They're not all of a sudden changing their business model to online websites or something, right? They're sticking with what they do. It's just oversold in the short term. Twitter pummeled again, hit new lows, did try to reverse and got itself about a 0.5% gain on the day. I don't know if that's any indication of maybe an attempt at a bottom that could be excited there. I'm not sure. Netflix was one of them. Like I said, I've got the position. I sold puts on Netflix there. So got a little grief here this morning, not quite positive. But I just think, come on, look at how extended that is. You're getting a bounce. And even if it moves sideways, I'll be happy with that as well. That was one of them. I saw Starbucks as well hit new lows. Again, everything that hit new lows and reversed today, you're going to find this distance between it and the 20-period moving average. Just telling you that in the short term, it's extended. That green line, again, it's not voodoo, it's not magic or something. It's just a visual way to see how price represents itself to the average. That's it. Some people get crazy and like to, they crossed over or they, yeah, okay, that's fun to watch, but all you're doing is seeing a representation of how price has performed. Amazon, also extremely extended. This is a market mover. So all of a sudden, Amazon trying to recover back a little bit here and deserves it, I think. So even if that has a couple-day rally, that's enough to pull the markets up, right? That's enough to give you that turnaround Tuesday and all that fun stuff you got going on. Okay, stocks in the news, and we'll take your questions a little early here today. You got Citigroup in the news there. They're going to bring their employees back, right? Starting in February, Citigroup employees can start coming back there. They want them back to work. Kohl's, along with a few others. We happen to own Kohl's, so that's cool. I got a nice little pop out of that today. They are being targeted as a company that that wants to be bought out. I forget who it was. I was trying to think of the name there. Omron? Starboard. Starboard's looking to buy them out. I think $64 a share. It looks like that's where it's at anyways. Unilever's going to be another one that's in the news because of that. Unilever, that was a Financial Times. That's just another company that's, got activist investors building a position in there. Oops, sorry about that. So what else we got? We got Goldman Sachs with the big sell-off from last week. Barron's had an article over the weekend that said that's a discount, right? It's extended, it's oversold, it's undervalued, and that was their comments basically on that one. And Wynn, I thought this was interesting. Wynn is looking to sell their sports betting app, right? Like this is the beginning of all this, right? Shouldn't they be excited about that? I thought it was worth in the 2 billion range, based on all the numbers I'd seen in the past. They put it up for 500 million. Make sure that's right. Yeah, 500 million. So got a handful of downgrades and people questioning that. What's going on there? Why are you selling it? Because that's probably cheap. So I don't know what the game plan is there, but they were in the news for that. This week, earnings-wise, you've got Archer Daniels, American Express, General Electric, Johnson & Johnson. This is tomorrow, by the way. Lockheed Martin, 3M, Raytheon, Verizon, Capital One, Microsoft, and Texas Instruments, which, by the way, Texas Instruments has been down 6 of the last earnings reports in a row. The best performer in terms of highest probability of beating on earnings is Johnson & Johnson, 95%, followed by Lockheed Martin. Followed by Raytheon, 94%, Lockheed Martin, 93%. Lockheed Martin also down 7 of the last earnings reports there. So, is this the time? Do you take your guess there that this is it? All right, what else do we have here? I'll look for your questions here in a second. We'll do that. How'd you do today? Did you buy the dip? Do you get excited? Do you add a few bucks in there? Where's everybody at, huh? I love it. And so tomorrow, do we have Turnaround Tuesday? Or did we just start that today? That's pretty, it's an intense turnaround, seriously. How many, and this is an easy way to look at it. You could teach a third grader this. How many of these guys are as big as any of these guys? None of them. The biggest reversal we had. And in the notes from Jazz this weekend, too, I put a lot of stats, right? Nasdaq having its worst start to the year ever, right? In history, ever. The worst start to the year, if you take the first 3 weeks. So how many of these guys right here look like any of these? None of them. That gives you an idea of how big. That was a 2-day move all inside of 1 day there. Peloton holding it. Oh, man, okay. So I think they're being pushed to sell the company or something. Caught the news on that one there. You've got it at 57. What were you? This one kills me a little bit because if you buy a stock, you always have a spot where you say, all right, I'm in at 57. If it goes to, 60 or something, I'm a seller. But if it goes to 55, I'm out, right? What happened? What made you say, I'll hold it to 30? Maybe it was something you didn't care about, but yeah, it's a tough one, right? I don't know that I'd be excited to hang on to that one. Doc's going for a timid Tuesday. You think it'd be kind of quiet? That would be normal after such a large day there. I think the momentum continues. Think of all the people that will go home today and see that after seeing it day after day, the market selling off, they're going, oh, this is frustrating. They come in, and now they come home and they see, oh, there was a reversal. Oh, shoot, maybe I should buy something, huh? You get a little bit of that. As January goes, so goes the market. Did a study on that last year, right about this time. Maybe we can hit you with that again. Yeah. You say Netflix is extended, I do, but look at all the names that fell on earnings. Snap, PayPal, Pins, they're all still dragging, have fallen more than the gaps down, so why Netflix? Well, okay, so you're looking at, let's start with your Snap there. So Snap is extended as well. There you go. Same thing. So Snap's already in a downtrend and starts to roll over. This is also extended. This is another one. I'm not saying you wouldn't take a shot at something like this to the upside there. I think it's a reasonable one. PayPal, not the same case, right? So PayPal is not extended in the short term. They just had a little bit of a sell-off. You likely see a little bounce in here, but think about your risk to reward, right? As this starts to bounce, where's the obvious place that people want to sell? It's just a few bucks higher, right? Oh, and I should say, where's the obvious place that the short-term people want to use as a target? They don't want to fight all of this right in here. Now compare that to Netflix. As you start to rally, where's the first place that people start to say, I don't know, maybe I'll sell? It's about halfway. It's very popular for people to use about half of this gap here. So give or take 445, right? Somewhere in there. So your risk is that, hey, I'm going to take a shot here, 350 maybe, see if it goes under that, you walk away. But I'm taking a bigger, or I get the potential for a better return without having to say, all right, PayPal, take a shot that this bounces, but where does it bounce? Does it bounce all the way up here and just magically break through all of this nastiness? No, because think about what happened. You have months and months of people that have losses, right? They hate it down here. It's like the last comment on Peloton. They hate the fact that it's trading this low. As this starts to rally, think about the people that go, well, it was at 160, now it's at 175, maybe I'll just take my smaller loss now. Oh, now it's at 180, I'll take my smaller loss now. Those are sellers that are going to be pushing against what you hope is clear skies ahead. So to me, a big difference there. Yep. You think we'll get a 20% drop in the next few weeks? I think that part's early to tell. I'd be just purely guessing. What you look for now is this momentum. It's great momentum to start for the bulls. Obviously, they're putting their stamp on this market. If we don't get much follow through here and there's quiet days, I'll give a day extra because of the Fed, right? Typically pretty quiet. But if you don't get follow through up here that starts pushing and pushing and pushing, forcing people to chase and going, darn it, I should have bought on the way down, then you have a recipe for the next higher low. So I wouldn't call anything there and guess, because it would be just purely a guess. Yeah, right? Yeah. But we'll see. I hope it happens, personally, and I hope it happens quick, like this 10% drop did. I love the quick drops. I don't like the bleeds that just keep going and going and going. That bothers me. Yeah. Spend some time reading more about crypto and the metaverse as well this weekend. Interesting people you are. Block, yeah, got the name change now. So you open that position, taking your shot. You like that name? Same thing. Very extended here. I don't know if this is the exact bottom, but I would say if I had given you money and I said, just pick a stock and go out there and buy, and you told me that that's what you did today on this stock, I couldn't fault you for it. I'd say, okay, that's aggressive. I don't know that you got the bottom. Maybe it wiggles around a little bit, but I like that you bought that cheap, and I like that you bought something that's extended. So I would be happy with you. Thursday and Friday will be down because we are not going to be here. So sorry about that. That's what you get. So you get a Tuesday, Wednesday rally, and then, oh no, are we rolling over? Yeah, like the old days if you lost a paper deed. Yeah, there you go. Yeah, I love it. Well, we'll see how this goes. Of course, I'm always watching. I got my phone constantly on and stuff. So the rally from here, is it meaningful, or is it just people reluctantly buying because they feel like they missed the drop, right? I don't know. I don't know. Back to the hoodie. How do you get one? I need to get a new one too, man. We need to put an order in. See, you can't tell because of the magic of cameras. This hoodie is darn near gray at this point. It's been washed so many times, but I changed the camera setting so it looks like nice and sharp and brand new. That's fake. It's all white. It's gray. Messing with you. I saw ARK got their little recovery today, right? I mean, it's something. But boy, that's a tough go lately. But yeah, little recovery there. Handful of names. You finally got your Coinbase to bounce a little bit. That's a big position for them. And that's just because crypto reversed off lows as well. Not quite all the way. Look at Bitcoin, right? Not quite all the way, but maybe a temporary low there for you, all of you holding that Bitcoin. By the way, this whole Bitcoin's the future thing, like, okay, we know that, so where is it? That's like inflation. People are going, oh, that inflation, it's going to get out of control. We know that. It's already out of control. Where's gold? Why has nothing happened? So I'll keep my stance on Bitcoin for the moment, and I hope I'm wrong, because the amount of money to be lost there is super, super significant. Yep. Yeah. Short covering, and maybe, remember last week I mentioned that brokerage firms were saying that their margin, that the amount of accounts they're loaning on margin had hit new highs. Mentioned Interactive Brokers, and Schwab, I believe, was the other one. And how many of those people don't know exactly how to use margin, right? I've done like 3 or 4 classes in the dojo. What is it? Specifically, how do you use regular margin, Reg T? How do you use standard, just regular, so you have Reg T margin, portfolio margin. So we went through all of that to try to teach and explain a little bit. But you wonder how many people said, oh my God, I'm killing it, right? Last year I did great. I don't know what this margin thing is, but let's do that too. Now I've got more money. And they probably paid a huge price over the last couple of days. So you have brokerage firms automatically selling positions. Those are the people that make videos on YouTube about margins dangerous. You shouldn't mess with it. But it's okay on your house. It's not okay in the market. Okay. Yep. You like, well, yeah, that's the downside, right? So when the market falls quickly, I get excited because we can just do what we got to do. But it sucks for people that are dollar cost averaging maybe every week or bi-weekly or whatever it is. That part's a bit of a bother. Yeah. I don't blame you there. Yeah. I'm with you, Harry. Yeah. I hope that's the case. You're going to have to suffer through some up days here. I think people, the short-termers are going to get excited about this, but we'll see. Don't get me started, Andrew. All right, let me wrap it up there. Thanks for putting up with us today. A little short-handed on the old staff, but we'll be back tomorrow. Going to do this all over again for you. Enjoy the rest of your day or evening, and see you then.